Hi, thank you all for being here. I feel like it's the last leg of a marathon, and some of us are a little bit more finished for the finish line than others. So, what we're going to be discussing today is really a round robin of the global landscape of what VCs are looking for, what they're excited about, as well as some things to consider if you're on the other side going for funding. So, I'll hand it over to Sarah and let our panelists introduce themselves.
Yeah, thank you so much. Thank you for having me. My name is Sarah. I'm the managing director of Blockchain Founders Group. We are a startup accelerator. So we help startups at the very beginning, early stage. We have a program and we run it twice a year. And at the end of the program, we decide whether we want to invest or whether we don't. We are pretty agnostic, but only Web3, crypto, blockchain. And yeah, happy to discuss the VC world.
Hey, how's everyone doing? I'm Rich Bond, the founder of BlockHunters Group. We focus pre-seed to seed stage investments, primarily infrastructure. What really makes us unique is we also have a recruiting firm, which is very synergistic with our venture fund. We'll come in with not only capital, but actually with more of a traditional headhunting business. We'll help our founders with market data, hiring strategy, anything talent related.
GM everyone, my name is Anton, head of Hodl Ventures, which practically is venture capital and the private market fund of Hodl Group. On the group level, we are multi-stage fund manager out of Europe, running several funds on the liquid book side, private market, and HFT and algo strategies.
Great, thank you. So one of the first questions, and I'll let Sarah kick off. What are some of the interesting trends that you're seeing in deal flow coming in? I feel like the market's obviously come back. We're seeing really increase in really exciting projects. So what are some of the trends or key areas that you're seeing?
Yeah, sure. So maybe quickly look back. We had like really strong topics over the last year. So we had the DeFi summer. We had a super strong area in refi. We had metaverse. We had NFTs. So we had like super strong hypes over the last years. At the moment, I don't see like such a super dominating hype, not the one thing, but several different things coming back or being more important now. Well, I mean, we can't deep dive into several, but just to mention some. I think Deepin is getting like a super strong topic. Energy services around the whole topic are getting super strong. The whole topic around tokenization is still a big one, and I think it will definitely stay. Of course, DeFi plays also a role. We have DeFi, which is still, or payment, everything around payment. I think this is the most obvious case, and this is still an important thing. And yeah, well, everything around meme coins, which is not something for investments, but not for classical investments, let's put it that way. But yeah, I just mentioned some topics, so I will hand it over. We can discuss about some things more, but this is what came to my mind.
Yeah, I think to kind of double down, I think stuff we're seeing on the tokenization front and real world assets is quite interesting. I think with the evolving regulatory environment, we've seen institutions kind of dip their toes into the water, but especially with like the upcoming US election, throughout Europe, the regulatory clarity people are starting to get. I think it's allowing institutions to be more aggressive with their capital and feel more comfortable interacting. I think we're starting to see people realize that real world assets and stuff of this nature has yet to really pull away from the linkage to traditional systems. A lot of these protocols have heavy linkages to the traditional systems and are built on top of them. So seeing ways to actually utilize blockchain technology to draw true efficiencies rather than kind of these double fees, double settlement times that actually kind of hinder that blockchain efficiency.
Anton, anything to add?
Yeah, I think outside of Vertical's perspective, what we are seeing on our side is basically venture capital guys and private market guys moving away from the private market side to the secondary market side, especially given the fact that this cycle most of the upside has already been captured by the private market, and a lot of at least directional players are seeing much better upside with essentially special situations or secondary market deals. So we see a blend of, or a hybrid strategy you can call it, a blend of private market and secondary market with OTC, for example.
Great. So I think something Sarah mentioned is I'd like to go into a little bit more is the residual hype cycles that we've seen, right? I've been in the space since 2014, so there have been quite a few. How do you think that has changed the way that VCs look at projects as well as how projects approach VCs? Because I believe there's been a maturation, but I might be wrong.
I think investors more now than ever are really looking for market validation, and at least if you're early stage, like a path to customers, whether that's you have on your POC potential pilot partners, but actually helping yourself validate that problem, I think goes a long way because of these hype cycles. I think a lot of these very hyped narratives have proved out over the years that they don't always last or are not sustainable. So anyway, as like a founder, you're able to further validate the issue you're trying to solve, makes a world of a difference.
In my opinion, I think test. I think there is a dichotomy present because on the protocol level, founders are looking on their protocol from the fundamental perspective and how to fundraise. And on the investor side, fund managers are looking for number one variable, which is risk-adjusted return. So in my perspective, I think there is a principal difference between the fundamental value and the price and performance, and the two does not always correlate. So I think it brings a lot of miscommunication as well sometimes.
Yeah, maybe to add on that, what we are also seeing, I mean, if we are at those crypto conferences and within our bubble, there are many things and people are super excited. But if you kind of step out, people still asking those questions about where are the use cases, so where can I really use the technology? And we have many use cases that exist because we have the Web3 or the blockchain technology. But beside that, I think it's getting more and more important for VCs that there's also a bridge between Web 2 and Web 3. Of course, not for all of them, but it can be a clear focus to try to bridge those worlds. As we just said, institutionals coming into the market, it's getting bigger. People want to understand it. We need to ease still the system for everybody to enter, basically.
Sure. So I'll take something that was said earlier, and I'd like us to look into it a little bit more. So we're a global panel, and the regulatory environment in the U.S. Is making progress forward. We've got some clarity in some areas, other areas still scarce, and we're in an election cycle. How do you think over the past, or what have you seen in the past, let's say 12 to 24 months? In my observation, what I've seen trending is there has been a movement where previously it was very heavily US is where a lot of the VCs were, and they were investing in US companies or certain regions. How has that changed over the last, let's say, 2 years?
Is the question on the compliance side or?
No, just for investment trends for VCs. Where are you seeing projects coming from and where are you seeing funding going?
Yeah, I think if you take the crypto native private market in general, the space is pretty much separated between APEC on one side and United States on the other side. And there are actually very few crypto native fund managers out of Europe. So we are few of them basically on the Hodl group side. And then with regards to funding, I think many great developers are coming from APEC, Middle East. I feel like Dubai is becoming a great hub and network effect for crypto native developers. But we don't see very, very clear changes in the past, as you said, 12 months, for example, on that side.
Yeah, and to speak, as I mentioned, we have a recruiting arm as well with our venture fund. I would say a lot of teams are going very global with their talent, so they may be based in the US or based in Europe, but key core contributors like engineers might be in different jurisdictions, which is a testament to kind of the users they're going after. They might be going more on a global scale versus kind of focusing just on the US.
And regarding what you mentioned, the regulatory side, I think, of course, the space is getting more regulated, but we are still far away from the traditional finance market. And I think sometimes, of course, the hurdles are higher for startups. But on the other side, I think worst case scenario for a startup is you build something, it's going amazing, you're your team is growing, the product is really cool, but then any kind of new regulation kicks in, and for any reasons, it's not allowed what you're doing anymore. So I think on that side, it helps that the regulations is getting more clear, and we have it to just prevent those, from my perspective, worst case scenarios.
Absolutely, and that's a perfect follow to my next question. What are some key considerations if folks in the audience are founders going for funding or in the situation where they're build or pre-build or build? What are some key considerations, either learnings from projects you've invested in or things that they should know, aside from your previous example, what are key topics where they could look at a key takeaway and bring that back to their daily life?
Well, there are many. I can start. So the first thing that comes into my mind was already mentioned. You need to be able to sell your product. Of course, you need to build a good product, whatever the product is. But you can have the most amazing product. If there's no founder that can sell the product, nobody will ever get to know about that product. So being able to sell whatever you build is going to be, from my perspective, one of the most critical things, because especially in blockchain, we have like amazing tech people, but sometimes we are lacking still on the marketing and selling side, because you really have to go out and do that hard job. So also within our accelerator, we really try to push founders to go out, to sell, to do that. And another thing that I realize quite often is, I think if you start a startup, there are thousands of things coming to you and you need to take care of so many things. But at the end, founders need to learn to focus on the real priorities. And this is said so easy, but for me, this is one of the most key and changing things, because it's super hard always thinking about what is the one priority and how can I stay with that priority. Because overwhelming things happening, calls, emails, whatsoever. So everything is kind of disturbing you. But if you're not 100% clear of what the most important target is, and you're not willing to focus on that, you kind of get lost in other things that also might be easier to work on, because I think this is something human. So we are tending to doing the things that seem to be pressing, but they are maybe not the thing that needs to be done right now.
Yeah, and I think to take it a little bit of a different route, if you're a founder and you're fundraising, I think it's wise to realize how small the space actually is. If you look around the room right now, there's people from all over the globe, but you don't know who knows who until you actually know. So even though our fund, we focus on infrastructure, that doesn't mean I don't every once in a while chat with like a gaming project. Although we might not make an investment into gaming, if you're checking off the boxes, how we go about due diligence for an investment, that doesn't mean I'm not willing to pass the deck to a gaming fund or an investor that might be interested. So I think keeping in mind that every time you're having a conversation with a potential investor or potential partner or whatever it is on your day-to-day business, to always be putting your best foot forward and think of it as this is your dream investor, or this is your dream partner. Even though on the surface level they might not be, you don't know what other doors they could open for you.
On my side, I believe it's important to know the difference between the deal side and the product side. And I think the product side is usually tackled always good, because there is no one who knows the protocol better than the founder does. But we've passed on many deals, even though they had amazing fundamental side, great product, great revenue model, but we simply passed because of the deal, because valuation was too high, the vesting schedule was not within our mandate. So I would say if you want to fundraise from VCs, it's important to understand as I said, the product side, fundamental side, but also being able to structure the deal properly, that it fits the market and fits the current, appetite of investors.
Yeah, to add on that, basically understanding the legal part.
Exactly, yeah.
This is like, oh yeah, I totally agree on that. We see that quite often. And of course, everybody wants to get the best out of the deal for himself. And if you might agree with somebody at the very beginning, and then your cap table is kind of ruined, you might never be able to solve the problem. And so, yeah, take care about the legal thing. And another thing, one last thing is, I see it quite often that founders struggle if the team is growing because they are not used to leading a team. And so how do I cope with people? What can I expect? How much work can I put on them? And if the team is still small, like 1 or 2 team members or maybe 5, every member is like super important. And so you don't want to lose them, but you also need to do them the right things. And so, filling people's time with the right tasks, coming back basically to the first thing I said, is also hard at the beginning.
Perfect. So in our last few minutes, I think something that is interesting, and I didn't realize the benefit until TaxBit, my company, went for a few rounds a few years ago, decent sized rounds, and it was kind of in the really big cycle. Our VCs are an incredible extension, and I think it's something that I didn't realize until we had that at our disposal. And I am very close with a lot of our VCs, especially their comms teams. So what are some key areas that you all as VCs would like either your investees or portcos to understand, or something that is a benefit that you don't see utilized enough, but people should consider?
Yeah, for me, I would say outside of our capital, we're very focused on talent, and I think founders need to understand if you want to build an all-star team, you need all-star players. You can't have an A-plus player and a few B players surrounding them. That isn't going to lead to eventually your vision and this all-star team. So I think prioritizing talent and how you go about that can be really crucial for your eventual success. Because if you have early hires that don't pan out, that can set you back very significantly, because then you have to retrain someone, get them up to speed, and it just becomes a whole messy process. So if you're looking to build an all-star team, don't take shortcuts to it. Make sure you're going after the best talent.
The question was more on the operational side or investment side? I didn't get it.
As you take it, either.
Like general value add. Yeah.
I think it's definitely much more than about mere capital and cash. And I think it's important to find an investor that's competent, I think, within the vertical that you build your product with. If that's the DeFi protocol, you want to find investor that focuses on DeFi, for example. If that's AI and blockchain intersection, similar applies. And I think it's also quite important to find investor that also is a great fit when it comes to the stage they come on the cap. Because I think it's super high value if you have a strategic investor that can basically double down and size their position along the way. And I think, given the fact that venture capital is basically a game of exceptions and a game of extreme outliers, and we as VC, we want to find this one bet and then have very big, outsized conviction bet in this protocol. So I believe this is very important.
Yeah, maybe in general, VCs can kind of help you and guide you. So they can mentor you, coach you, help you with open questions, help you to find the right team, help you to focus on the right things, and also make a lot of introductions. So it is basically a manpower or man force behind, which you can just use in case you are unsure about certain decisions. Of course, sometimes there come things like reporting with it as well. But I think what I experienced, founders should know about their numbers anyway. So I think it's just you have somebody to ask who's more experienced in that way. And if you have like a strategic investor, and it's always a win-win situation, because as investors we want you to succeed, because then we are successful as well. So we have like the same thoughts and we are aligned on the targets, and this is something really positive.
Great. I had a few people submit questions ahead of our panel, and one of the main questions that came up quite a few times was people looking to get into the VC area. So they might have been in industry on the other side, and then they say, I see all these VCs, I want to go work at a VC. How either did your path go to get to your role now, or what are some key tips for someone looking to get into a role like yours?
In my opinion, I think, of course, it's important to be competent, but at the same time, I don't think as a VC you need to understand, the most technical complexities or intricacies on the technical side. But I do believe you need to understand the commercial side and the business side really well. Things such as deal structuring, but also really what the market wants and needs. And then as a VC, I don't really care about being the most, technically competent person in the room. What I care about is finding the right people, the right team that's very able and very knowledgeable on the technical side, and we understand the commercial side really well, the business side.
Well, I think it's not that easy to get into the VC space, honestly. So if you found a startup and exited, or just, I don't know, even if you closed it down, this is something that is highly valuable because you understand the other side. But if you want to enter, I mean, there are amazing education options, for example, from the US, the Venture Institute, you can go through. They have an amazing network. You can try to really learn the way how VCs are thinking. But in general, it helps to get in contact with those people and maybe also try to offer to work for free any sessions, make introductions, start as venture partner, go to conferences, really try to deliver any kind of positive value without directly wanting a super high salary or something like that. And this, yeah, I think this is the way how you can do it, because quite often people in the VC space kind of start, maybe not in the Web3 space, but in the classical Web2 VC space, kind of start after they studied as a venture analyst, basically, or analyst, investment manager, something like that, whatever the title is. And so if you already did something else, it's not that easy.
Yeah, and I think figuring out a way to create your own proprietary deal flow can make you indispensable no matter what fund you are at, no matter what you want to do. And I think there's a lot of ways you can go about that. The way I like to think about it, and was kind of the origin of BlockHunters group, I was thinking, like, if you are a startup founder, where are you going first? And that's legal. You might do tax and accounting. These are all like pretty central nodes within the fundraising ecosystem. Our thesis was, if you're a founder and you're looking to hire 5 engineers, you're going to need capital to do that. So we have this proprietary deal flow that comes from the recruiting business, and that's our edge on the deal flow front. So I think if you're looking to break in, there's tons of big name firms out there that just from the name alone, they can bring in their own deals. But if you want to get at that table, I think adding a deal flow that they do not have and your own proprietary one, stemming from an underlying skill you might have or connection to a certain industry involved around fundraising, I think goes a very long way.
Great. And then final question is, another thing I get asked often is what publication or news resources, if it's Twitter, if it's Twitter Plus, where do you go to get keep your finger on the pulse of what's happening in the industry? Because you all have to be ahead of what's trending in mainstream and our like always moving space. So where do you get your tips, tricks, and keep your kind of finger on what's happening?
I think it's not the one thing. I think Twitter or X for sure is a great opportunity. I think also conferences, hackathons, because especially with hackathons, you get in contact with builders that want to do something new that is not yet available. And in general, you have many different kind of newsletters. And so, yeah, you kind of have to screen through them and think about what might help you. And then, of course, have the deal flow or have talks to other VCs, kind of connect in the whole scene. And yeah, just read a lot, I guess. What's happening, what's going on, where are the transactions, where's the focus going, which is not like a linear process.
Yeah, kind of what was touched on, like ultimately we're trying to be the first to a narrative. So I think Twitter is a great place because often if it's all over Twitter, you're most likely late to it, especially if you're waiting for a few years for it to pan out. You might get caught in that hype cycle. I think there's a lot of good service provider companies out there as well. I think the TIE is an awesome resource. And there's a lot of companies that provide this awesome research and data that is readily available. So definitely, I think looking into providers like that.
In my opinion, I think X and Discord are great. But I think at the same time, there is a lot of noise, of course, on these platforms. So I think it's quite important to understand and distinct facts from opinions, and especially given the fact that venture capital is a game of probabilities, where you basically assign probabilities for a sequence of events that you believe will happen in the future. You form your thesis, but then you still must be able to make adjustments along the way and be able to flip your bias very fast. So I think also to add to that, I think venture capital is much more about the relationship business than it is about investment business. So it's about who you know, not necessarily what you know, I think, as much. So us being connected with other VCs, staying in a close circle of venture capitalists, private market investors, I think actually that gives the edge and the value on the information side.
I think something that all three have you've said in different ways, but it's the same trend. It's who you know, it's your network, it's being mindful of, while it might not be an investment opportunity with the fund you're talking to, they likely know someone that might be, and it's a much warmer intro than going in cold. So as we have 2 minutes left, anything that you think we should make sure the audience knows, or any other tips that you think we should share? We're not going to make market predictions, so I won't ask you that.
I think, I would love to go back to the point of, from the fundraising perspective, I think it's so important to understand the difference between when you structure your deal for VCs, between the product side and fundamental side, and the deal. So I think, as I said before, we've passed on many deals that had amazing fundamental value, great USPs, sizable, sustainable competitive advantage relative to the rest of the competition, but the deal was just too pricey, for example. Valuation was just outlandish. So I think it's so important to structure, at least on the token side, right? But actually both token and equity as well. Proper valuation, the right vesting in place, and structure all the supply parts in a convenient way that you don't have an outsized inflation coming in the environment when there is no ample liquidity, for example, in crypto space in general. That usually kills the token.
Quick question, because you just hit on something. A few years ago, valuations were through the roof. Have you seen, even though the market seems to be back and seems to be driving, have you seen down rounds? Because the valuations in 2020 were pretty substantial.
I think something that's very distinctive for this cycle is basically the format of the deal where there is low market cap and high FDF, which is fully diluted valuation. And I think both VCs and private market investors, as well as protocols, will have the reality check this cycle. So I believe that next cycle we will see much more reasonable valuation, much less multiples, because simply there is no marginal buyer to buy something with $100 billion valuation and inflation coming along the way. Just nonsense.
Anything else to add?
Just as closing thoughts. If you're fundraising right now, I think there's a lot of VCs that are still actively looking and hungry. I think with the summer, things naturally slow down. So if you have been fundraising, don't be discouraged. I think things are about to pick back up, especially summer being over. So yeah.
Don't take it no personal. I think that's important.
Perfect. Thank you.
Thank you.
Thank you.
Thank you.